Hi, my name is Kevin Nguyen, and today I'm presenting Carl Schwartz, CPA, and why he has got his CPA suspended. So he's currently 67, is a CPA in New Jersey, um, and I have some links to all the websites that are included in this presentation. So we have the SEC filings, LinkedIn, and then the state of New Jersey license to see if it's active or not. Okay, next slide. So background, Carl Schwartz prior to the incident went to Barak Graduate School, which is this picture. He has an MBA in taxation, which is strange because you'd think he'd have an MBA in asset management or finance or anything like investment banking or something like that. He's been a partner at RRBB for a while. He's worked at RRBB for 42 years. So he got his CPA in 1981 and then worked at RRBB right away. They must really like him because he's been working there for 42 years. He has a lot of endorsements, like 59 for tax and tax accounting. And when he was at RRBB, he was the president, chief compliance officer, managing member, and 49% owner of RRBB Asset Management Incorporated. So he's an investment advisor registered with the SEC. So he has a pretty good background. Nothing fishy here. So the incident was in August 2016 to April 2017. So it was almost a whole year where Schwartz was engaging in cherry picking scheme. So what cherry picking is defined as the fraudulent practice of allocating profitable or unprofitable trades by investment managers and their staff to certain accounts preferentially. So what he did was basically lie to his clients, to all of his clients. So he would make it for the newer clients, he would give them the clients the idea that their trades are profitable, but he was just allocating profits away from his older clients, so that he would have more clients and basically increase more revenue. So that's definitely illegal. He broke 6 laws. Here's the first page. He broke the Section 10B of the Exchange Act, which makes it unlawful to use or employ in connection with the purchase or sale of any security, a manipulative or deceptive device, or in contravention of such rules and regulations as the SEC may prescribe. And then the Rule 10b-5, this rule makes it illegal for anybody to directly or indirectly use any measure of fraud, make false statements, omit relevant information, or otherwise conduct business operations that would deceive another person in the process of conducting transactions involving stock and other securities. And then he broke Section 17A, which is the Securities Act, and it basically provides for liability fraudulent sales of securities. And here's part 2 of what laws were violated. He broke Section 2061 and 262 of the Advisors Act. He broke Section 207 of the Advisors Act. And it basically says it is unlawful for any person willfully to make any untrue statement of material facts in any registration application or report filed with the Commission. And then he broke Section 2064, which requires each investment advisor registered with the Commission, also known as the SEC, to adopt and implement written policies and procedures reasonably designed to prevent violations of the Advisors Act and its rules. 2, reveal those compliance policies and procedures annually. And three, designate a chief compliance officer who is responsible for administering the compliance policies and procedures. Which he was. He was the chief compliance officer. And these are just the links to all those definitions of the laws that were broken. So here's RRBB's firm policies. It's basically they're just trying to create a professional environment, and I'll just go over a couple of them. So one of their policies entails always performing client work to stringent accounting practices, standards, and procedures. And the last one is making RRB easy to work with while instilling confidence and peace of mind in our clients. So these are the policies, and yeah, Paul Schwartz definitely broke these. What was the punishment by the SEC from the federal side? So for the SEC, there's a $50,000 in disgorgement. I didn't know what that meant, but it means a remedy requiring a party who profits from illegal or wrongful acts to give up any profits. And then $13,754.12 in prejudgment interest. Prejudgment interest is defined as interest accruing on the amount of a legal award from the time of the damage to the time the judgment is entered by the court. So he was during 2016 and 2017, he was doing breaking the law, doing all that fraud. And then I believe it was, let me check right here. And then September 10th is when the commission filed a complaint against Schwartz. So they didn't file a complaint until almost 3 years after, around 3 years. Which it's right here. So that's the prejudgment interest for almost 3 more years, because the final judgment wasn't until May 11th. And it's the SEC announces entry of final judgment against President Maplewood, New Jersey-based investment manager for cherry picking scheme. Yeah, so yeah, this is Carl Schwartz's, perfect. And then 100,000 flat civil money penalty, which is a fine imposed on entities that violate certain laws and regulations. So the total up to $163,754, which is interesting because I guess the disgorgement is most interesting to me because, which, you know, he profited around 50,000, and I guess he gave it back. Yeah, he has to give up any profits, right? I'm not sure. There's definitely no other penalty or fees or cash penalty. So all those clients that they missed the opportunity cost or were fraud against, I guess they weren't reimbursed or anything like that. So it didn't explain how the clients were essentially like reimbursed. So reinstatement after 5 years from the date of the order, May 19th, 2023. Respondent may request that the SEC consider respondent's reinstatement by submitting an application to the attention of the Office of the Chief Accountant, which is the Office of the Chief Accountant of the SEC. Was a punishment by the state. So this is interesting. He's still considered a CPA in New Jersey. His license is active. I guess I'm not sure if it was ever taken away, but yeah, Carl Schwartz was able to reinstate his license quickly in the state of New Jersey, and I couldn't find any state fines, but this website, the New Jersey Division of Consumer Affairs, basically says he's still active and CPA. Again, he issued his CPA in 1981 and then worked for RRPB. Uh, and that's all it says. It doesn't say any fines or anything like that. Post incident. So I looked at his LinkedIn profile, and he still says, or people still say he's still being endorsed for tax accounting and tax. He's still the owner of Rosenberg, Rich Baker Berman, uh, and he's still a partner for the firm. Uh, to be honest, 50,000 disgorgement is not the worst thing that's ever happened for a CPA. But it's still pretty bad, and the case was settled. Uh, he the judge and Carl's lawyers agreed on a settlement, and I guess that's why Schwartz kept his job because he's been working there for so long. He held so many positions, uh, and I guess there was only 50,000 in profit from his illegal doings. So um, yeah, again, that's why he probably kept his job. Alternative pathways. What should have Carl Schwartz done? Well, obviously he shouldn't have cherry picked. He shouldn't have like lied to his clients that they were making money in their first years and took away profits from uh, the older clients um, to make it seem like the first year is really good, so they would retain or they basically stay longer with him. Why do you think Carl Schwartz made this decision? Um, I guess it was just cash, and there could have been like pressure for like more growth from from the board or from other partners. Was it the environment they were in, groupthink, or something from the past? Yeah, it was really hard to look up information. A Google search doesn't tell much about his past. Um, and he doesn't reply on LinkedIn. Personal impacts. So this is important. What lessons can we learn from this incident? So um, definitely don't cherry pick, avoid anything fraud. I did like how he held so many positions and was planned for many things, but not for that 1 year uh, between 2016 and 2017. What I thought was interesting is that when finding an asset management firm, you should probably check to see if the firm has a CFA or anything else related to asset management, because Schwartz's MBA is in tax, which is nice, but it's irrelevant to asset management. How will you act differently when you start your full time roles? I don't know. I guess definitely don't break the law. Don't do anything. Always be there for a public interest. And it was obvious that he was not. He paid the price. How can you avoid the pitfalls that your topic got into? Um, it's tough. You got to be honest. If you're losing trades, if your portfolio is in the negative, um, and I'm not sure how the economy was in 2016, 2017, but if if the economy is down, then I guess clients would understand that their stocks are not doing as well either. Um, so just be transparent. And that's it. That's my presentation. The complaint was filed on September 10th. The final judgment day was May 9th, 2023. The litigation release from SEC was May 11th, 2023. So this is a long process. This is almost a 6-year process, just for the matter of Carl S. Schwartz. I hope you enjoyed. Thank you very much. Have a nice spring break, and